The following is a presentation of TFNN. Live at TFNN, the Money Masters.
Let's go to Shivan in Boston. Shivan, what's happening, brother?
Watching you both on Tiger TV.
That's a beautiful thing.
Yeah, definitely it is. Learning a lot from Tiger.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. Appreciate all you tigers and tigresses growling and prowling out here with us. Right now, we have the Dow down 6, Nasdaq's down 18, S&Ps are off $1.50. We got gold flat at 1,776. Silver is at $34. We got let's see, light squeeze crude's up $1. Bonds are down 11 ticks, and King Dollar is up 27 ticks at 79.89, and Apple is on the way to 625, which is the ABC structure on the way down. But the bigger aspect for Apple is that is it on its way to 353?
Oh, going to the high volume bar, are you?
It's, you know, this is pretty intense, folks. Let me tell you something, because just even saying it is intense.
Yes.
But, you know, the reality is that right now we'll see how it ends up hitting the 625. That's the ABC structure down. Yesterday had the expansion with volume, which the market had no volume yesterday. But guess what? Apple did. They're getting out of town. And because this baby had gone up so dramatically, there's nothing to save it on the way down.
Yeah.
So
no question. I take when I take a look at the A to B equals CD, because it did such a shallow retracement. I think it does more than the 1-to-1 AC.
Yeah, no.
I'm
right.
thinking the 595 area at least. Before it really. But I mean, we'll just have to play it one day at a time. But like you said, probably the most. Yesterday was a pretty quiet day in the market.
Right.
But the one thing that you could go to was really the Apple. How did Apple trade it? I mean, that was probably the most significant event out there.
It was. There's no doubt about it. And, bottom line is that what you'll see, because of the impact of the,
the weighting structure.
The weighting structure, it's a big number. It weighs down on those indices. No doubt about it. Now, my King Dollar, man, I gotta call Nico up. Well, hey, hold it. Maybe I can send King Dollar over to your house for some juicing.
You can, okay.
That's what I think we do. I think we're gonna send King Dollar over for a nice green juicing.
I've always got it with me.
Hey, listen to this. I'm telling you something. These big box stores, the Costco's of the world. I specifically was in Costco's on Saturday, right?
Okay, yeah.
Guess what they're selling? Your juice.
Are they? No,
Swear to God,
really?
yeah. So check this out. This is how quick this thing is going around.
Yeah,
right?
Yeah.
So they call it green something.
Okay.
They had all these people set up. The
Did
stands.
they really? Yeah.
Sell it in quarts.
Okay.
Okay, and it's green something. I
no
forget.
kidding.
Yeah.
Oh,
but I thought it was so smart because it totally makes sense because you get the fresh stuff and it takes so long to make.
It does.
But on the other side, I'm saying to myself, oh, this is interesting how this works, man. Do you know what I mean?
Yeah. There's no question it takes time. Well, shoot. This morning I started my segment off. I asked people if there was a bank that would give them $86,400 each morning if they would sign up for it. And now the only thing was that you have to just simply have to be able to spend that money each day. And actually, there is a bank. It's called the Time Bank because there's 86,400 seconds each day that we each have.
Oh, really?
Yeah. So I know that a lot of people were willing to raise their hands and say, I would sign up for any bank that would give me $86,400 each day.
I like that.
But, which is more valuable, time or money? Time, big time.
Oh, time is definitely more
but then you
valuable.
you change that perspective and say, hey, how about 86,400 seconds?
Right.
And it really, I was just when I was thinking about what I wanted to maybe throw out there and talk about this morning, it was really going back. I remember the movie that we watched when we were doing our West Coast tour, and all that they were doing was their whole life was based
Folks,
on time.
If you haven't seen this movie yet, it's called In Time. See it. I think it's one of the best movies out there. I've watched it now a dozen times. Yeah. I just love watching it.
Yeah. Well, it's great because it really kind of gets your head straight with regard to what it is that you're doing with life.
And what do you want to do?
We talked about yesterday. I talked about linking the known to the unknown. So I thought, that'll be the easiest way for me to kick something off this morning. Just talk about if you want $86,400, and if you'd sign up and you have to use it and invest it each day. And I just switched it over to how many seconds.
I use it and invest it every day.
That's right.
We got another guy that does too. Rick from British Columbia. What's going on, brother?
How you guys doing?
We're doing great, man. You having a good day out there?
Real good.
Cool, man.
Hey, I think Facebook looks pretty clean. I mentioned to you about a week ago the head and shoulder formation that it had on it. And it looks to me like anywhere from, 600, 615. And then it'll just bounce back to the neckline where that gap is there around 653 is kind of what it looks like to me.
Hold it. Facebook, 653, what are we talking about?
I think we could get a bounce back up into that gap is what I'm trying to say, where the neckline is.
On Facebook?
Sorry, Apple. My mistake.
Oh, yeah, here we go. I'm saying, boy, Facebook just went from $20 to $6.53. That was a good one.
All those Canadian dollars. Yeah, just doing a conversion.
Hey, that could be a discussion 10 years from now. They do have 1 billion users, so. But,
yeah, that's right. That's a fact.
But anyway, that's what it looks like to me. And look on a weekly, it's a false break from that 615 level. And when they came out with earnings that time, remember it dropped all the way down to 570, and it just blew me away because that's got volume down there too, and blew me away how it shot up from there. You know what I mean?
Yes.
Yeah, but then you know what? That's how markets go, man. They bring more people in. People won't sell, and this is going to be a classic case of people had huge amounts of money in their pocket and didn't take it. And you wait and see. I mean, it's going to blow my mind, but it's written all over the place because the complacency is, and I can understand it. I can understand it because if they stayed in it, you win every single day. I can understand it, but that's just the way it goes, man.
Hey, I'd like to have a little chat with the bull there. Does he was it a little while ago, Steve, unless you've changed your mind.
Yes.
If you don't change your mind, you won't have no change to play with kind of thing.
Oh.
But is there a little ABC structure that you see? Because on a weekly, I think there technically is, isn't there?
On a weekly, there technically is. On a monthly, I think there technically may be as well. My take on it is from number one, I am absolutely a bull. But I don't have any bullish, with regard to trades, let's say, for my clients in my newsletter, there's all individual stocks with the exception of one sector that's out there. So I want people to understand that. My take is that the market moves up into the election time, so into the middle of November before we really start to see a big pullback here.
Well, the thing is, Romney wants to get rid of Bernanke, so he's fighting for his life. And
no. Oh,
that's not true?
Well, no, he said he wants to get rid of him, but he's not fighting this for his life because it's not like the president can come in and get rid of the Fed chairman. I mean, he's got a term. He's got a term, he's got a contract. So.
And it's pretty silly to say it, really, eh?
Well, those politicians are out of their mind. I mean, let me tell you, okay? They just want to turn this TV off. I can't stand it. Driving me crazy.
Well, some of it, Rick, is you just look. Tom was suggesting he's trying to find some energy for his king dollar. So when you start taking a look at the correlations that are out there between the currency marketplace and the valuations inside our marketplace, I think the euro still wants to bounce higher, and that will go ahead and take our markets higher as well.
So where's your A point on this little ABC structure? Is that the third or fourth week of July? Like, you're not going right to the lows of June, are you, on a weekly? Like, because we did take it out with volume. You're right. Like, a few weeks back.
Well, you can almost really just start all the way back to the original A to B equals CD off of the lows in March 2009, just simply on the monthly chart. So if let me just go back and take a look at that. So if we take a look at those lows, so let's just take a look at the A to B equals CD off of March 09. Grab the right tool out here and see where that completes. So off of March 09 up to the high in April, pulls back in April 2010. So the 1-to-1 A to B equals CD takes you up to 1564, which is going to take you right up into the highs of October 2007. And that's where you make a double top test out there, and that's really what I see as the possibility for it to. Now, I think it's going to eventually get there, but whether it's going to get here between now and November, that I'm not sure of. But I am bullish running in through the presidential election. There's just too many other indicators that I take a look at out there that says that prices are going to have any meaningful pullback right here. Now, Apple's an exception there because of the weighting structure inside there. But when I take a look at some of the other indicators out there, like this one here. It's a real simple one. GE is a great leading indicator for substantial corrections in the marketplace. And if you're taking a look at Tiger TV, and Rick, you can do this on your charting software as well. I've got GE up in the upper quadrant of my screen, and I've got the Dow in the bottom quadrant. And what you can take a look at here is GE, which only represents 1.25% of the Dow. No matter how much that gets demolished, it's not going to drag the Dow down. But what it does do, you can use it as a leading indicator for large corrections that are out here. And GE, if you go back here into the 2011 timeframe, July 7th, you can see GE was on a downtrend. The Dow was just simply traveling sideways. GE was giving you an indication, a leading indication that the Dow was going to make a nice correction. That's, in fact, what it did. The next time that there was any kind of divergence out here inside GE went back to October 2011. So from October 2011 through November, basically the Dow, in essence, along the tops was traveling sideways, but GE was moving down. Boom. What do you have? You have another meaningful correction to the downside inside the Dow. The next time you see that type of correlation on GE goes back into the March of 2012 time frame to the May 1st, 2012 time frame. The Dow was moving up where GE was moving down to sideways. So again, the correlation, GE was giving you a leading indication on the way down. You've got another time here going back to June 2012 to the highs here in July 2012. You had GE traveling basically sideways where the Dow was moving up. And so right now, as I take a look at it, you've got the market moving up, the Dow moving up, and you've got GE moving up. Can we have pullbacks? Absolutely. The market is always breathing. But I like this. This is not head and shoulders. This is not retracements. This is just simply GE because it has its hands in so many things out there. It's a really good leading indicator for large corrections in the marketplace. I can't tell you why it works. I just know if you go back and you take a look at the charts this way, that it does work. And so that's where some of my thinking comes from.
I think GE just went down 5 points.
Well, I keep going down 5 points.
Yeah, but you put GE on a 6-month weekly.
Yeah.
You got a little ABC structured. It's $3 to about $23.50.
Yeah.
Right.
Okay.
But the SPYs on a monthly, if you put the SPYs on a 1-year monthly, it just does not have the volume.
Oh, no question it doesn't have the volume. Yeah, no, I'm not saying that it's necessarily confirmed AB equals CD patterns that are up there. But just because it doesn't have the volume doesn't mean that it won't move higher.
Oh, no.
Yeah, But we know when it falls out of bed, though, look for the volume. That for sure.
You bet. Thanks.
Okay, brother. Have a great one, man. Have a safe one. Steve Rhodes, Tom O'Brien, all you tigers and tigers, you stay right there. We're coming right back. We have the Dow flat. Nasdaq's off 20. S&Ps are off $1.50. We're going to be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate all you tigers and tigresses growling and prowling out here with us. Let's take a look at some of the high-volume stocks in a low-volume market. You have BAC, Bank of America is, yeah, it is today. Eli Lilly's up again?
Yeah.
Man, look at that. Okay, so you got Bank of America up 5 cents. Eli Lilly's up 2.26. That was up 2.26 yesterday. Sprint Nextel's down 6. You got Owens Corning off 2.96. We got Cliffs Natural up 2.37. Netflix, oh, that's a beautiful thing. We had I had the Jazzman call yesterday from Fort Lauderdale, and he had puts on this.
Oh, did he really?
Yeah.
Oh, good
and
for him.
When it was in, it was going to test that 77.81. Never made it. Thank God he didn't sell it right then and there. But the bottom line is that he was going to get some action.
Yeah,
so,
it's Candle Signal, created an island now out there from last night.
Yeah, totally.
So I mean, it couldn't get up there. I thought too that it was going to get up to the. Just seemed like it was alady inside that gap.
It would make sense.
Is there some news on it?
The Bank of America downgraded it.
Okay.
Like you're gonna listen to Bank of America. I mean, give me a break. Bank of America bought Countrywide. Why would you listen to Bank of America? I mean, it blows my mind. It's like, when I heard that this morning, I said, oh, really? So Bank of America downgrades it, so you're going to listen to it. It's like, okay. Bizarre.
That's funny.
What is going on here, man?
That is funny.
This is going to blow my mind. Hold it.
Like
Less than 10 seconds. They're going to steal this house.
Oh, okay. That's too funny. While Tom is buying a house, folks, I'll go take a look, which is great. I love it.
Yeah.
Absolutely. Yeah, because you can't let anybody steal it. You got to grab it yourself.
Right.
So let's go take a look at some of these other stocks here that are moving in. Let's take a look at Edwards Life Sciences. That thing is the stock that is absolutely getting hammered here this morning. The ticker on that is EW. And we'll take a look at this thing. Volume-wise, it's got big volume out of its tanks. I believe there was some news out of this thing in Europe. But if you take a look at this gapping down this morning, folks, so far it's done 3.7 million shares. Now what it's going back into is a high-volume day. Now this high-volume day didn't exactly have wide price spread, but it did have a lot of volume out there, 23 million shares. This was on March 31st, 2011, 86.72 to 88.19. Trade out at $87. This thing actually looks like it wants a lower price out here. Maybe this will come all the way back to the last time this thing actually broke out. There's an open gap out here going back to April 24th, April 25th time frame. That low is going to be in the $76 price range. But unfortunately, this one, which was on my target buy list, will be coming off of that list here today. That's on Edwards Life Sciences, down 18% this morning, off almost $20 out there. If we take a look at some of the other stocks out here that are popping and dropping, let's go take a look at Eli Lilly. Tom mentioned that is up again today. You got the LLY as the ticker symbol, up 4% today. Let's go see what is behind this move here. LLY is the ticker symbol. See where this is going to. So you have a nice sign of strength yesterday. Well, let's take a look at this thing here. Wow. So let me put this on a longer-term time frame first, and then we'll come back and take a look at it and see what it is doing here. So Eli Lilly up past let me put it on the monthly. So let's really go back here. Let's first start off on the monthly chart on Eli Lilly, see what this thing is doing. Let's take a look at where this is trading. So this is trading back into the January 2008 time frame, actually not far from the swing. Okay, no. You've got a swing point high out here going back to April 30th, 2007. That's what it wants to trade into. You've also got this high volume bar. Okay, so here's where it is. Here's the supply line now, which takes you back to 2005 inside Eli Lilly. You're trading inside there. You've got 51.08 is the low. 58.89 is the high. So it suggests that it wants to get up to 58.89. Let's take a look at a retracement off of its all-time highs out here. That would go all the way back into the year 2000, August 31st, 2000, makes a high out there of 108.94, pulls all the way back into the March 09 time frame. So really, just simply a dead cat bounce of that, folks, takes you up to the $58 and change, $58.43 to be exact. And that's where we saw the most recent high volume bar out there in the monthly chart, going back to April 2005. So that's where it wants to trade to. Now let's go down to the weekly on this thing. Let's see if we've got an A to B equals CD out here. Nothing that really looks wonderful. Let's go ahead and put this on the daily. Take a look at daily A to B equals CDs out here. Here, what I would do, folks, is I would start probably all the way back here in the August 2011 time frame. So let's take a look and see if it took out a B point with volume here. We'll do that when we come back from the break. 877-927-6648. We got the Dow down 6, S&P's off 2, Apple down $9. We'll be right back, folks.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien here, and we were taking a look at Eli Lilly before the break there, and just take a look at the daily A to B equals CD. We know we were looking at the monthly chart. We were looking at Eli Lilly wanting to make its way up to the $60 mark, $59.89. If we take a look at the A to B equals CD, and what I'm doing here is I'm drawing this pattern, folks. I'm coming down to the swing point low in August of 2011, August 9th, 2011. We know our markets made, if we just took a look at the indexes themselves, making a pretty substantial low down there. That's your A point on Eli Lilly on the daily chart. Your B point is going to be out in the January 2012 time frame, out around the 41.85 mark, does 10 million shares. Now, you really don't cross that B point with conviction or volume until August 24th. Then you've got 48 million shares. I would say this thing had conviction as it got. You know, it was just the day before, it was just slightly over it. But this qualifies for me as taking out a B point with volume. Gaps up. It has the whole enchilada. Yesterday, a nice sign of strength in it. What this is about to do is about to complete a 1 to 2 A to B equals CD that takes you up to that $55.04. So that's going to be really close to that $59.89 level. But this thing has got some real strength behind it right now. But it looks like that's where it wants to go to. I don't know what Eli Lilly is doing, but they're doing something well.
No, big time. It's a drug company, right?
Yeah.
Yeah.
You know, and we know that some of these, in fact, one of the drugs I ought to pull up is Sarepta Therapeutics, because that thing had pulled back. I don't know what it's doing today. SRPT. I'll pull up that while you're looking at Eli Lilly. Okay. You know, Sarepta almost getting back to its breakout area. I'm going to put this on a shorter term chart. Any real big news between Eli Lilly and what they're doing? Not really. Yeah.
Sorry.
Let's take a look at that. Actually, folks, you got to love it.
We're trading houses here, folks.
Yeah.
Okay.
And, folks, you've heard Tom talking about the Tiger Real Estate Opportunity Fund. And if you go over to the homepage of TFNN.com, got a couple different things that you can do. Number one, up in the upper, under breaking news, you're going to see the white paper, the bull market in Florida housing. Well, his bullhorns, if you can't see them, they're truly, they're retractable, okay? He's got the retractable ones. Well, they're up right now. I can see them. I've got to be careful because if I lean over too much, I'll get nicked. I'll get hit.
Boom.
But go over to the homepage of TFNN.com, download that. Also, there's a link inside there over on the right-hand side. If you want some more information, if you meet the qualifications as a qualified investor, you can get with Kathleen. But the fund is open, and so he is long and strong and buying homes, which is beautiful. So I can sit here and actually watch what's going on, which is very, very cool. And but now I'm going to go back over here to Sarepta Therapeutics because this thing here had wide price spread. Did that? This thing went from $10, $12. So it was $10 back in, it's $8 actually back in July 2012. Closed out its session in October. A few trading sessions ago out at $45, $44.93. Now I'm going to put this on a short-term chart here. This is one of those ones where you got to be really use some prudent money management here because you have a huge gap. When I mean a huge gap, folks, we're talking about $15.07. That's the high of the gap from October 2nd to the low of that's the low of the gap. The high of the gap actually is the following trading session on October 3rd out at a price point of $29.26. So that's a really, really wide stop. Now, if you take a look at this is the 10-minute chart, or take a look at where price actually pulled back to yesterday, really pulling back very close to the breakout area. You had some really big volume come in this equity here during this one. This is a 10-minute chart, folks. During the time frame, all the shares, or not all the shares, but you had 3 million shares in the 10-20 time frame. What I really wanted to see this gap actually get tested. That's the low at the $29.26 mark. And I'd like to see that thing get tested with lighter volume, which shouldn't be a problem, but then give us some type of bullish candle configuration out there. And that's on Sarepta Therapeutics out there. But the thing is, if you close below the gap out there, with the gap being so wide, what you have to do is probably take your trade off and wait for some other signal out there because the range there is just way, way, way too large. So I don't know. I mean, how would you play something like that?
SRPT.
Yeah. Would you
right?
just simply wait for it to see if it would come back and totally fill the gap out there from October 2nd?
Whoa.
It just doesn't seem plausible that it's that it will come back all that way.
Oh, it will.
Eventually.
Yeah. I mean, I wouldn't get into the stock.
Yeah.
Not even close.
Yeah. Well, because you take a look at that big gap out there.
Yeah. I mean, it's going to fall out of bed, just a matter when.
Yeah.
And that's, I mean, if you're in it, hopefully, this is the one that you take the big money, take half it out of it, take your principal out of it.
Take your principal, yeah.
And then you'll come back in it again. This one here, what you want to be all over, folks, no doubt, is at that $17.12. Yeah, you can bet the house on it. No, seriously, do you know what I mean?
Yeah, no question. Now, what's interesting is it only has about 22 million shares float. And October the 3rd did 27 million shares just on that day.
Look at that thing, man. I mean, well, you can see just even the folks that even bought it at 45. I mean,
no question.
They're in trouble right now.
Yeah, no question.
So, what does happen with something like this, though, what you can get is that you can get that third gap, which would be an exhaustion gap, would it be twice the size of the largest gap. So that's 14 plus... oh my God!
Yeah,
so it's 15.
So that would that'd
be like $30 gap, right? And what would cause that is another big drug company, because this is the drug company with the
Duchenne's.
So
strain.
So what ends up happening is that in that context, if someone else comes in and buys them, what did happen there too is that I read that drug study, and what's interesting is that there were. There's one second. So there's inside that study, what you had is that interesting. There wasn't a lot of people in that study.
Okay.
I believe it was 8 people. So that's,
okay.
You know, I mean, it worked. The bottom line, I saw the twins. They're 2 brothers, and they
were walking, right?
What was really wild, they gave it to one and not the other.
Okay.
And yeah, the one that had it is not in a wheelchair.
Okay.
Exactly. It's like, you know, hey brother, give me some.
Oh yeah, you're not kidding.
That's pretty intense, man. I mean, there's no doubt about that. You know what I mean? So
absolutely.
Okay, so I'm done for the day here. Let's see.
Well, if we take a look around the world here right now, you've got the DAX trading down 37 points, so that's off 0.5%. But really just continuing to travel sideways here. You got Angela Merkel. She was over in Greece. I didn't see the party that they were throwing her. Didn't look like it was a real good. They were real happy to see her over there.
No way.
They think there's some hidden agenda.
Oh, there is. Of course there is.
You don't think she just wants to go to Greece and Opa, a little Saganaki, a little Uzo?
No, she's not like you and I. She's going over there with the handcuffs out. Handcuffs out, no doubt. Well, hey, listen, you know, and yesterday, you know, they finally got the European Central Fund up.
Oh, they finally got it.
They got it up yesterday. So check this out. Oh, okay. I gotta show this for you. I gotta find this. You're gonna just crack up, folks. So let me.
It's only 3 hours. 3 years later.
3 years. Right? So watch this. They not only got it up, but then the announcement they made is that we have it up, but we don't expect that no one needs it now. I swear to God. It was like, you got to be kidding me, okay? I got to get this, because it was like hilarious. Okay, Spain's going down the tubes. Of course, they got it up because they're going to need it, okay? You know, but that was their announcement. You know what's sad, folks? When you think about what politicians say to citizens, and it's getting worse as time seems to go on.
Yeah.
You know, you got to fight back. You know, you got to fight back, meaning in the context that you can't let things just go out there that are just flat out, like, I don't know if I can call that a lie or just something that's so outrageous. I guess it's so outrageous, okay? It wouldn't be a lie, because a lie would be he doesn't know whether it's going to be used or not. No one does, really. Do you know what I mean? I'm speculating that it has to be used. No, I understand that. You know. But let's put it this way: it's against common sense.
That's right. Okay, yeah, that's the way I like to look at it, because when they first came out with the mechanism, the European Stability, mechanism was years ago. They knew at that stage they needed to look. If they could have got it funded right off the bat, they would have.
Yeah.
You know, instead it's really just been used as kind of a marketing tool.
And they've done a good job.
You know, they have. They've pulled it out of their bag when they've needed to you know, press conferences and so forth.
Yeah.
But it is a little outrageous that they don't need it. But we'll continue to laugh about it.
Oh man, I'm telling you. Well, do you know that today is the anniversary of the lows in 2002 and the highs in 2007?
Oh, is it?
Yeah.
Oh, how about that?
Yeah.
No, okay.
Same day, October 9th.
How about
Isn't that crazy?
Yeah, it is.
Now, you know what's crazy, folks, is that think about something, okay? This is how crazy markets are, and that's the bottom line, is that when you think about it, I start thinking, man, this is kind of wild. It was October 9th.
Yes.
Okay? And we're at highs in the marketplace. Well, if you remember, Lehman had already been blowing up before that.
Absolutely.
So it really
that was in July.
Yeah.
July or August 2000.
It hadn't been affected. Well, it was affected the market. Well, let's go back there and look at it, because when I realized that, I said, "Oh, this is kind of interesting how this shakes out." Because so if I look at,
it's funny that you say that, because you know I'm working on my workshop that I'm doing, my live workshop, and what I'm doing is I'm showing people the power of candles.
Right.
Okay, because the candles really, as you like to say, talk, walk, and squawk.
That's right.
I consider them the secrets of the Orient.
Right.
And really talking to folks about, you know, the importance of using candles versus paying attention to the news and information that's out there.
Yes.
Well, the chart that I actually have, it's not on this computer, it's on my other computer, I actually go back to Lehman Brothers.
Okay.
And so there was, if you take a look at the daily chart, several months beforehand, there were some bullish as the market came down.
Yep.
There were some bullish engulfing candles that were created, and then the announcement of J.P. Morgan taking over Lehman Brothers for was $2 a share, I think, originally. Right. You know, and you watch
Bear
it come.
Stearns. Bear Stearns.
Yeah, Bear Stearns.
Right.
Okay, Bear Stearns.
That's who blew
okay.
up first.
Yeah,
right,
Bear Stearns.
right,
So I went
right.
back to the Bear Stearns. That's right. I went back to the Bear Stearns deal.
Right.
And sure enough, boom, there it was. The candles were really.
Here's the candles
That's
here.
right.
Now look at this, folks. I put a quarterly chart up going back to 1990, and with candles. So check it out. Okay, you got at the first high in 1999 and 2000. Guess what? You get 2 hanging mans plus an inverted hammer. That's it. You're done. The second high, you have a hanging man with the bearish engulfing. I mean, now the thing is cool here. Look at
this is cool because this is a quarterly chart too, so it's even a longer time frame. That's right.
It gave you 6 months to get out.
Yeah.
That's sick, man. And see, you know what's really cool? See this one right here? What I'm looking at, folks, is in 1999. This is a last engulfing, and those are really wicked dangerous. These are wicked. They're bullish big time at lows. At highs, they're devastating. And at highs, when you first enter, it can look like a nice candle. That's a devastating sign.
That's right.
You never want to see that happen. And you can see then. Oh, you know what I got? Oh, baby. Where's your horns? Hey, Rick, British Columbia. Okay, if you're watching Tiger TV, you know what you're looking at here. You know what you're looking at here? 1, 2. You're looking at. We're testing 3 black crows right now. Now I'm being a little creative here, folks. This is my old Boston Technical High School skills, my drafting skills. But okay, so watch. This is what 3 black crows go like this. Symmetrically, they're supposed to be pretty close. Okay.
Yes.
And I'm pushing this a little, but let me tell you something. If I annotate this for you, you're going to see what I'm looking at here, and what you'll see is that there's 1.
Yeah.
And I'm taking those 3 together, and I'm taking this one here is that.
Yeah.
And then the last one, and 3 black crows love to get tested. And if that's the case, folks, we got another amazing day today.
Yeah. Oh, you think so?
Yeah.
Okay.
Yeah. Because the test, the test is not only there. The test, it's up there with light volume. It's up there all of the above. We'll see where that shakes out. But let me tell you, that's, and it's going to be a close call, man.
Yeah.
But that very well could be what's happening. And I thank Kip for heads up in the den. So here's your 1-to-1 ABC structure on the way down, 625. And folks, if you don't understand how to do these ABC structures, okay, just go get my book, The Art of Time in the Trade. On Amazon, it's $20, whatever it is. Because once these things start shooting off, okay, it's a 1-to-1 at 625. And all it showed its sign when it broke that B point, broke with volume. Now, what's happening today... And this is, I'm telling you, if you own Apple, get a stop in, because now we get a wicked expansion in volume. We're at 9.5 million already, okay?
Yeah.
It means it's going to do more than 22 million shares. Did 22 million yesterday. Bottom line is that there's been plenty of money made here. And, when there's... we saw, yesterday when we were on the air, folks, okay, what was important to understand is that one trade... When Apple come down $5,
that's right. There were no bids out there.
It was only 7,600 shares. That's nothing.
Yeah.
It should have been able to eat that. Apple shouldn't have come down $5 on 7,600 shares. No way, Jose.
Yeah.
Steve Rhodes, Tom O'Brien, all you tigers and tigresses, you stay right there, folks. We have the Dow down 45, Nasdaq off 38, S&Ps are off $7. I'm going to just hit the S&Ps, too. We're going to be right back. Apple.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Managing your money is a business, and I want you to succeed in any economic environment. The markets are changing fast, and if you do the right thing at the wrong time, you'll have your head handed to you. But if you do the right thing at the right time, the rewards are extraordinary. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, and I have a roadmap that'll guide you and give you the flexibility of change. To succeed in these markets, you need a competitive advantage, and for one solid day, I'll teach you the language called Japanese candlestick charting. Without it, you're dead meat. With it, you have an unfair advantage. Learn the techniques that provide you the strategy for entering and exiting a trade, plus learn the best trading patterns in the business. It's not enough to do the right thing, you've got to do it at the right time. Join me October 19th for our one-day online course, Candlesticks, Silent Signals, and the Speed of Trust. Go to the homepage of TFNN.com and sign up today, because an unfair advantage is a great thing to have.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate all you tigers and tigresses growling and prowling out here with us. Right now, you got the Dow down 54, Nasdaq's off 41, S&Ps are off 8. And let's go to those S&Ps.
The King, did the King get some of that juice?
The King's moving. The King, yeah, so someone hit the S&Ps, and the correlation, folks, is so direct, it's just a mind blower. It really is. Yeah, the King, they're pushing. Let's see if we get any juice behind it. Okay, so right now, you still don't have any volume behind it, but what you have is that you're at 79.96. Now, the swing point up here, I'd like to see it stay under that swing today, which is 80.25.
And that swing's got how many contracts? It's not a big volume.
No, it's not.
20,000 or 22,000 maybe?
It's easy pickings, actually. So what you have is that you're only dealing with 18,000 contracts. Okay. So if you stick right underneath it today and then you get that sign of strength tomorrow, then you get action. But see, because you know what's really wild? is that just like, your candles are so symmetrical?
Yes.
What happens here is that the way this had come down on the September 7th, that's why we need such a sign of strength, folks, because this came down with the sign of strength. It came down from 81.39 to 83.3. Velocity, it had it. So when you go into something like that, you need just
so that September 7th time frame, that's the Bernanke day, basically. So how about gold? We haven't taken a look at gold, see what how gold is doing out here. Is that correlating the same as somebody hit gold yet?
Gold can't handle it. Gold can't handle it.
Only down $3 though.
It's only down $3, but you know what? Every single time that it can't get above this area, it's telling me that, it can't handle it. And particularly because, so watch what ends up happening, folks. It's just not the technical aspect that I'm looking at either, okay? You have the world right now in a mess, okay? The Middle East is in a mess.
Yes.
You have Iran that, they're taking all their money. So Iranians in general, folks, own a huge amount of gold and jewelry, period. They're smart people. They've been basically doing this for centuries, okay? When you go back, you got to remember that's the cradle of civilization,
for sure.
So what happens there is that that the demand for gold is over there. So I'm looking, I'm saying to myself, okay, hold it. We have a huge demand for physical gold.
Yes.
Because,
certainty.
Yeah.
But just simply, you got a currency. That's right.
And it still can't get over the highs.
Yeah.
When I'm putting that together, I says, you know what? It just needs more time. That's what it needs. And, time is a funny deal. A year and a half from now, we'll have gold at $2,500, $2,250, and that'll be nothing. But guess what? That's going to be a year and a half from now. And that we all get used to it. Who would ever think you get used to $4 or $5 gas, right?
Oh, I remember the day when I'm pretty sure it was.
They're hitting as we're talking. That's sick.
Just the delayed reaction.
I think they'll listen to us on the floor, folks. Someone just hit this contract for $5. That's sick, man.
But I remember the day when I had some of my employees, had come back from lunch and they were watching the price, the price on the sign of gasoline getting over $2, I think.
Yes.
They came back in. They said gasoline's now over $2 a gallon.
I know.
And then there was 3, and then push it to 4, back it off. Now,
isn't that
4
wild?
is just 4. You're pulling up to a pump hoping you're only paid $4.
Well, I happen to be really lucky, folks, because I live 3 miles away from the office, and I don't go that far.
Yeah.
But I feel for people because, I remember in Boston how far I had to go. Everything's an hour and a half or an hour. It's like, how do these people afford? Well, I'm not kidding. How do you afford it? Because you're talking a mortgage payment.
When you start really taking a look at that invisible tax of what it, that's the biggest. That's the biggest thing out there.
It's big money, man.
Yeah.
Listen, folks, you stay right there. Coming up next from Newton, Massachusetts, we got our man, Mr. Basil Chapman, Victor Jones, Darryl Martin, David White, Ken Shreve, and we're going to be back here 4 to 6.
Take care, folks.